Hello, everyone. Welcome to our channel chat series here with the GTDC and with IDC. We try to do these every couple of months, so I see some familiar names here and some new ones joining the call. So welcome. Wanted just a couple quick things before we launch here is just a friendly reminder to be on mute unless you're a speaker, just to help minimize any kind of background noise. We have today, we're going to have two guest speakers from the IDC team. We have Lauren Laverty, who you guys have probably seen in the series before, is the VP of Data and Analytics, and then Jeff Newton, who is the Director of Infrastructure Channels and Ecosystems for IDC. We also, of course, have our host, Frank Vitagliano, who's the GTDC CEO, who will just get us started here with just a few quick words, and then we'll deep dive into some of the data. Thank you.
Great. Thank you, Kavita, and welcome, everybody. I don't know about all of you, but I'm certainly excited to get some of the information and the data for the first quarter. There's obviously a lot of discussion about the IT space and what's happening, of course, the economy in general. And so this is always good to catch up on that. So a couple of things ahead of time. I just want to let everybody know that our typical process for our content reports are we generally have 3 a year. First one will be available, we believe, in May. Distribution Innovation is the title. And what it will talk about is a number of the trends and developments that are happening in the marketplace and the distributors' services and support activities associated with that. So I think you'll find it really interesting, and that'll be available sometime in the May timeframe, and you'll see lots of social media activity around it, and you'll be able to access it through our website. The other things I want to mention just quickly is we have our GTDC EMEA Summit coming up here June 13th to 14th in Amsterdam. So we're about 5 or 6 weeks away. So those of you that have global responsibility, that might be of interest to you. And then we're working on finalizing the date for our February 24 event. We are probably within about a week to 10 days of having that date locked in. So we'll provide you with those details later. So a lot to cover today. So Lauren, let me turn it over to you, and thank you once again for you and your IDC team for helping us and participating in these, because they're terrific. Thank you.
Yeah, very good. Thank you for the introductions, and thanks everybody for dialing in. This quick overview on the agenda. I think we've got a lot of good content for you today, so let me jump right into it. We're going to start with the macro environment, and just quick summary right off the bat. The economic environment seems to be a leading story for the macro environment. So, this is survey data from our Future of Enterprise Resiliency survey. You can see the details there on the bottom, but economic concerns are at the forefront of people's minds: inflation, recession, and labor shortages. And you'll see that in some more detail as we go. Another view on that is kind of a global breakdown of where the uncertainty around the economy will have an impact. And, right there at the top, very wide perception that GDP will be lower than projected across regions. So, the economy is on everybody's mind. A little closer to home, this is U.S. inflation data, and it's broken down by component. So the key points that I would make here are that energy has been a huge factor and is much more volatile than the other components. Gets a lot of press, and it's actually negative in the most recent reading, declined about 10% from, I think it was +5 to -6, something like that. So that's obviously a good thing, but there's other categories. Food is ticked down just a little bit to high single digits. Shelter is actually still on the way up. So, this is in the news every day, but it's not even across all the components, and it remains a key factor. This next graphic breaks it down by geography. So we've got the US in red. You can see basically the latest reading from March is down to 5% inflation rate. But major economies and trading partners are spread out in a range. So the European Union is in a dashed gray, that's at the top with still much higher inflation. And China is down at the bottom in blue with much lower inflation. And the flat line at the bottom is Russia, only because the data isn't available. If you look back a year ago, it was at the top. And so I would assume that they're continuing to have quite high inflation. So obviously this is global environment, but we're all interconnected. And so it affects us here in the US as well. So some key points on the macro environment. Inflation is receding. High interest rates continue to depress growth. The latest reading was at 5%, which was down a full percent from February. Energy, I mentioned that. The Fed interest rates is another key factor I'm sure everybody knows about. The last increase was 0.25%. The consensus is another increase coming up, but then perhaps some slowing. Also, the risks to financial sector and regional banks in particular is an example of the financial stress. GDP here, it's interesting that data that we have actually shows an increase in the trend for key regions, US, Europe, Asia, Canada, despite the pessimism of the survey. But it just reflects that there's a lot of uncertainty. It remains a political factor, and we just don't really know where it's going to come in. So there is pressure and risk there. In terms of IT spending, the underlying trend is solid. We've got key long-term drivers like digital transformation that are driving investments, but hardware and particularly consumer devices are slowing in most regions. I left China and the war in Ukraine on the list here. There's a lot of uncertainty about both. Having said that, there seem to be sort of taking a second seat to the macroeconomic environment. And I think we won't really see a dramatic shift in their impact until there's some notable event that changes the trajectory. And until that happens, they're basically going to be background inhibitors and sources of insecurity or uncertainty. So wrapping up the macro environment and reiterating, basically on the left-hand side of this chart, this is IT spending growth from our Black Book projected through 2024. And on the left side, you can see the device categories are all much lower than the enterprise and infrastructure categories on the right. But there's, light at the end of the tunnel. So 2023 is often the low point, and then we're expecting higher growth next year. So this data is total IT spending globally, but it has it reflects a lot of the trends that we're seeing in the North America and NADT data as well. All right, so with that kind of background set, let's transition into the NADT data. And I'm going to start off with actual raw weekly data here on the left. As in the past, the blue is total revenue, the orange is year-on-year growth, and the dashed orange line is a polynomial trend of the growth. You can see that clearly things are slowing down. We had 12 of the 14 weeks in 2023 were below zero. We've got a lot less volatility than we had a year or more ago, so that orange line is relatively stable. But the trend here is clearly going down, and it looks like it's continuing. When you actually look at the weekly data, it's not so clear that it's accelerating. So week 4 of this year was down 23% year on year. making the first 4 weeks down minus 13%. But the next 7 weeks, I think it is 5 to 9 averaged plus 2% year on year, including, you can see the orange line popped above zero a couple of weeks there. So, that's clearly stronger than the first month. And then the most recent 4 weeks, weeks 11 to 14, were also down minus 13%. And the most recent week was down minus 10%. So that's no worse than the first 4 weeks of the year. So that what's happening is basically the trend line is, it's smooth. It's the actual data sometimes is above and below. You can see that very clearly comparing the dashed orange line to the solid jagged growth line. And anyway, we'll see kind of variations of that going forward. So finally here, the peak of our growth trend was actually late in 2021, which is longer ago than I think at least in the way I was thinking about it, we had more solid growth into 2022 and the decline is more recent. So anyway, the rolling 4-week view, you can see the decline clearly as well. The peak of the trend here was the very beginning, week 1 of 2022, so fairly well aligned. Finally, on a year-to-date basis, 2023, we're down 8% year on year. And so that leaves us still above the 2022 rate. We grew 12% in 2022. And I'm sorry, that should be, we're above all but 2022. So that means we're above 2021, 2020, 2019, et cetera. So we're down, but not that bad in the broader picture. Okay, as in the past, I've also found it helpful to look at this on 2-year average trends. This kind of normalizes the rebound cycle and smooths things out. I think it's a useful perspective to see kind of call it underlying growth trends. In this view, weekly revenue growth remains positive. And so you can think of that in a couple of ways. One is that the 2022 growth is lifting up 2023 values, or alternatively, that 2023 is giving up less than we gained in 2022. The timing, the peak was a bit later, week 19. We also just had a recent low, week 9 of 2023, but that's actually kind of nice in the fact that it's starting to show it as a low. That would suggest that we're going to see more positive growth as we get easier comparisons going into the year. And then here is the rolling 4-week view, very similar, peak in week 22, low in week 8, and consistently positive. All right, this slide is comparing Canada to the US, and you can see they're on quite different cycles. Canada growth has dropped very quickly in 2023, despite a relatively easy compare in 2022. This is a case where the trend view is relatively exaggerated. So recent growth was not that bad. It looks week 9 and week 10 were positive double digits. Week 13 was only down minus 2%. So what's happening is the math of the smoothing is basically capturing or accumulating a trend that's going down, and it just hasn't had enough data points to kind of turn that around. This is what the actual weekly data looks like. You can see, the downward shift in the trend in the dashed line. The solid orange line is a bit more stable if you want to. I mean, it's a pretty jumpy line, but you can see that it's not really clearly taking a dive. There's a dip, let's say, at the beginning of the year. And anyway, that's kind of how the math is working out. But let me give you a couple of builds here that add some details. So if you notice, I updated the far left chart, And what I added was the dashed line, which is the exchange rate of Canadian dollars to US dollars on a 2-quarter lag. And the correlation with the Canada spending line is quite strong. So I think that's a good realization and a good reference point. If you're looking at Canada data, you want to keep an eye on the exchange rate. It seems to have a pretty direct impact on spending plans. And then on the right-hand side, we've got a 2-year average of the rolling 4-week. And you can see that the trends are more stable and look better for Canada. We're getting down to about -6% for the blue line in Canada, but you can see it already starting to even out. So again, I think, good, very recent data. By the way, I didn't point this out, but the data is through April 9th. So just a short while ago, very current. And, generally you'll see trends are picking up. Okay, so let's take a look at the different technology trends. We've got the major product groups here being displayed. You can see in yellow, the biggest decline is in personal computing. That's been kind of headlines, and our own quarterly tracker published prelim Q1 results, which were down 30% year on year. And we had talked about softness at the end of the year, so we're seeing that same kind of a trend here. We're also seeing it mirrored in the AV and consumer electronics. It's not quite as bad, but it's also coming down quite a bit. And then the other category in gray is has a lot of consumer components, and that also is dipping down. So the 3 dashed lines are consumer-oriented products. The solid lines are more enterprise, and they're all above 0. And then the dark blue is the aggregate there. So that's the main points. Even within the PC trend, just sort of like the Canada, the last 7 rolling 4 weeks averaged -25% year on year, which is better than the previous 5 rolling 4-week periods. So we started off the year with -35%, and now we're at -25%. So, not numbers to get, they're not positive numbers, which we always like, but they're also not as dire as that yellow line seems to suggest that we're going off a cliff. All right, so then adding the 2-year average trend, you can see that all of the consumer device categories are turning up. In this first month, we are seeing some slower growth from the enterprise side, but overall positive. Okay, so looking at software, so because of the slowdown in PCs, software is now the largest category of NADT revenue. It is the green line there on the left is the total market, and it has remained positive. It's also ticking up. The strongest category has been applications, which is the orange line. It had a smaller decline in early in 2020 and more stable growth than some of the other categories. Most recently, it's stood out much stronger than the other software categories. So that is driven in particular by engineering apps, which, as you can imagine, are essential software, high demand, and also sell well through distribution. So pretty solid growth. The light blue line, excuse me, which topped the trends early in 2022, that is system infrastructure software, which is the largest category. It's above 50% of total software revenue through the NADT, and it dipped below 0 just at the beginning of the year, but it is already trending up, and so that's really driving the software results here. And then in dark blue, platform software, app deployment and development has struggled over the last couple of years, but in recent weeks really picked up the pace. So you can see that jumping. It's not quite the fastest growing in this chart, but it's right near the top in the most recent weekly reading. That represents about 10% of software spending. And then the chart in the middle and the bottom bullet, again, are the 2-year average trends. They're much more stable. You can see that the platform software is still declining. That's actually interesting. And I think we talked about that the last presentation, that's a significant part of the total software market that doesn't go through distribution, but it's a higher touch market. And so there actually is growth in the segment. And if distribution can find a way to tap into that, that would be a good opportunity, but it's not the easiest fit for distribution to sell. In comparison, the application segment looks pretty solid here. It's been leading over the last 6 or 9 months on a 2-year average basis. And again, the engineering software is the key driver there. Services is one of the other top categories here. We have had overall relatively steady growth. So the red dashed line on the left is fairly smooth and stays above 0 the whole time. Warranties is the most dramatic curve, but it's a relatively small percent of revenue. It's the single digits. And it has taken a dive in recent periods, which is fairly well correlated with the slowdown in device shipments. And so, as you can imagine, you sell fewer PCs and monitors and so on, and the warranties that go with it are also going to slow down. So, slower there, but they're again being supported by more enterprise-oriented services, and that's what's keeping the numbers up. Other services are benefiting from a shift towards higher value. So the services market in general is shifting more towards OpEx spending and outcome-oriented engagements. So as opposed to product level engagements, that is positive for the services market in general, and it tends to support the price of services. But it's also a challenge for distribution, which doesn't have the same level of touch as more engaged channels. So, that we've also talked about that. But as services get more complex and enterprise oriented, that's it's just something that we have to respond to. So, having said that, as you can see here, the revenue growth, even in distribution, has remained positive. A lot of the vendors are shifting their packaged products also towards cloud and these enterprise requirements. And so there still is buying, and then the vendors and other parts of the distribution channel are attaching services on top of that. So from a distribution perspective, it's important to kind of understand that trend and try to think about how to connect to or support that growth of other channels and the clients that are moving towards higher touch services. Okay, and then my last slide, I'm going to talk about personal computing, which is, stands out because of the impact on the growth rate, even though it's slipped a little in terms of a share of revenue for NADT. The left-hand side shows the rolling 4-week trends, and the dashed blue line that ends up at the bottom, that's notebook. That is the largest category by far. A year ago, it was about 70% of revenue. Now this quarter, it's down to about 62% because of the slowdown. So that is in part because desktops had a particularly tough go at the beginning of the pandemic in the broader market. They recovered a bit in late 2021 and early 2022, which you can see very clearly here in the orange line. So a bit of some of it is supply, some of it is, the cyclical nature of the demand. But anyway, that's diminished notebook share. And then the other piece is that a lot of the notebook volume over the last couple of years was driven by lower cost, higher volume, lower cost notebooks. And as we lose a lot of that volume, we're still seeing the impact on the top line revenue number. So anyway, that notebook number is driving the trend and pulling things down. Tablets are a little similar. They tend to be a little more consumer focused. You can see that they were more stable through the end of 2022. But as we get into 2023 and see more impact of economic headwinds and passing the holiday season and so on, those have come down a bit. But there are some categories. I pointed out desktop was doing better. Workstations has done the best throughout the pandemic. We had, very high peak growth there at the end of 2021. And workstations and desktops and let's see, which other, the other category. The other category is pretty small. That's POS and thin clients and stuff, but those three lines are ticking up. So another note here is that Apple has been shifting to more direct channels. So that is a headwind for distribution in general. Ultimately, we think that that's going to be made up with other brands and won't have such a direct impact on channels, but it's a pretty significant player that is, shifting out of indirect channels. And so that's a headwind, additional headwind. Anyway, bottom line, the 2-year view and the long-term view are more positive. You can see, we're basically have a low reflected in the 2-year averages. They're smoother. We're going to have easier comparisons as we go forward, and we're optimistic about it in the broader market sense and also for NADT. So that's it for me. Hopefully the trending and the commentary give you some useful context on how the trends are evolving and how to interpret them. And with that, I'll pass it to Jeff to talk about more details of distribution dynamics.
Hey, thanks, Lauren. And I just want a quick shout out to GTDC for the invitation to speak today. I'm excited to share some of the thoughts and research that I'm doing inside the infrastructure channel and ecosystems group. So go ahead and advance that slide one more time, if you will. I wanted to do an introduction to our team, just in case some on the call have never worked with us before, but we're the Channel and Alliances team, and inside the team, we have focus on software channels, infrastructure channels, and strategic alliances. We work also together with our global counterparts in Europe and Latin America, and also a group in the middle that works a lot with data. With Brendan, works a lot with our data pieces. And Daniel, you probably worked with him if you've done custom research with us before. So one of the things we like to point out about the team is that we are focused on the infrastructure channel. We're focused on the channels and the ecosystem aspect of the business. So if you want to go to the next slide, if you don't mind. And this is what infrastructure channel and ecosystem encompasses. It's really that focus from IaaS and PaaS. It includes the software, the infrastructure hardware, basically from the data center all the way out to the endpoints, including colocation, telecom, and distributors and aggregators, which are a key piece of our interest in. And a lot of my research is done about with distribution. One of the things we always say is we're not picking winners and losers. What we're trying to identify is research and data points that help you develop best practices and help you really collaborate the best you can with your partner community. And so that's what our outcome is for our team. And we've been doing that quite a while now. So go on to the next slide, if you don't mind. I'm going to jump into probably 2 slides, some infrastructure channel findings. So one of the big elephants in the room is the recession and the budgets and spending and those things. I'm going to cover it from a couple different areas. So you'll see data in my research from the enterprise, and you'll see it from the channel perspective. So for this particular slide, this is coming from our Future Enterprise Resilience Survey, which is based on surveying enterprise customers. So the enterprise customers are saying, we asked them the question about a recession in 2023 and what's the impact on your budgets. If you want to maybe build that out, there's 1, 2, I think, builds in there. If you want to build that out, go to the next one. Yeah, we'll just talk about it, it'll be easier. So when you look at that left-hand side, the purplish colors are really reduction in budget. The left-hand side are, and the light blue and the light green are really budgets that are going to stay the same or increase. And what I'm showing is that the customers are saying almost half of the customers are at least going to keep their budgets in check compared to what it was over 2023 with no impact. But there's still going to be a group of them that are going to increase their IT budgets this year. And you can see that'll flow through as we break it out into different regions on the right-hand side of the slide, where North America seems to be just a little bit more pessimistic than our Western Europe group. And APs really seems to be the most excited about this spending cycle, seeing the majority of it, more spending in that region. So if you want to go to the next slide, I wanted to build off of this. Now, what does this mean for our channel? So this is the North American Partner Survey. And one of the we asked them, what are your key considerations for your customers when they're buying technology? So this will be your partners who are selling to their end users, and what are they considering? And we can see that there's kind of a mix of different things. In North America, which is the darker green, the darker turquoise, we're seeing cost, ecosystem participation, and time to value as the top 3. And ecosystem participation is really interesting. We're seeing that more and more customers are looking outside of their industry ecosystem for partners who can build and deliver on solutions. So we're seeing now more and more partners come together in a multi-vendor, multi-partner ecosystem to deliver solutions. And when you look, compared that to Europe, there's really, they're all really close, close in measurement there, where Europe is really looking for a lot of different things. They're seeing sustainability and digital sovereignty a lot more than we are, but they're also looking at reputation of the vendor and reputation of the partner that are also included in what they're interested in. So when you're building out your programs, you're building out your go-to-market, keep in mind that those are some of the areas that your partners are looking at, because that's what their customers are telling them is important. Cost, we already knew that was going to be an issue because of the economic situation that we find ourselves in. But time to value. I have to now invest in this technology, but I need to show a return on investment as fast as I can. Let's go to the next slide, if you don't mind. I think there's a build out here. So what I did here is I wanted to show you, this was interesting to me. When we do our surveys, this is from our North American Partner Survey. And what we did is I included EMEA in here. And I wanted to show you, we always ask our partners, what is your primary business model? So for this particular survey, we had the top 3 were VARs and MSPs and CSPs, which was really not surprising. But this year we did something different. We asked, what is your secondary business model? And so the results are really showing that our partners are seeing that there's a change that's needed. This digital transformation that we've been talking about for the last several years, our partners are following suit, and the leadership that distribution and vendors have shown in pulling them along in this transition has really paid off. We're seeing more and more of their secondary business model as managed service provider and cloud service provider. And something that was interesting in North America is we're seeing a lot of strategy consulting firms pop up. That's who your partners are identifying as. So we're seeing that now partners just don't do one thing. There's a multiple list of things that partners have to do in order to remain competitive and show differentiation in this tight market space. So I thought this was an interesting slide to share, just from the fact that this is what your partners are thinking, and to know that there's more than one business model. They're not just a VAR, they're not just an MSP, but they're doing multiple things inside their practice to really help build that differentiation. Go to the next slide, if you would, Lauren. I wanted to show this one. Click one more time. I wanted to show this one. This is just a different view of what we just saw. So North America on the left, EMEA on the right. This is from our North American partner survey. Again, this is partners who are telling us this detail. But I wanted to highlight, I think, Lauren, you highlighted in some of your research, it was the product, the software, and the services were really key. And we're seeing the same thing. The sell is no different than what it was prior. I won't say no different, but it's similar to what it was in the past. Services are always a big piece, but look at now what we're seeing as a transition. It kind of flows with our previous screen, where partners are now looking at maybe a secondary, probably even a tertiary partner type. They're building out their own software. So this is a capability that's now being developed, and it's changing, a lot of things, because I think the customers are requiring that they need some special types of software. The partners are responding in building this out, and you can see who's building out the most. Now, EMEA has adopted this practice more than North America, but I think we're going to see that trend in North America continue to grow as we move into the rest of 2023. So let's go to the next slide, if you will, and build this out too. So I put some builds in here. It's probably easier just to snap on through. But we just looked at the budget, 2023 budgets. So now I'm looking at the spending plan. So I'm showing 2023 IT spending levels compared to 2022. We're seeing worldwide that the customers, this is what the customers are telling us, that the 47% are going to at least stay the same as they were in 2022, while 34% are looking to be higher than they were in 2023. So we're seeing tech buyers that have come in now to 2023 with budgets at least the same as they had last year. And they're ready to spend as long as they see some essence of the economy staying where it is now or growing. And if there's anything that might tip the scales in a different direction, they're going to be ready to pull back into that flat spending and protection. But CEOs now are seeing that technology is an investment category. If you haven't already had the chance to look at our CEO survey, take a look at it. There's two things that were really interesting to me. The first one was technology. Our CEOs are now saying they have to invest to win. And that means that they're looking to invest into technology as a differentiator to help them get into markets faster, to help them drive automation, to use AI and ML, to automate. So they're looking at this technology now as a key operating indicator of how they're going to move forward. And you can see that on the right-hand side, I broke it out into the regions where I think you just see that it kind of flows through with a similar structure as it did with the budgets. But, I think that we're seeing that there's budget there, and we just have to, look for that good economy to continue to help push us forward as we're going through from a partner perspective. Again, go to the next slide, if you would. One of the things that I thought was interesting from this Future Enterprise Survey spending survey report that we just got. This is, again, to reiterate, this is from the enterprise customers saying this. Which of the following areas are most immune to budget reduction regardless of the economic impact? And I highlighted the top three. It's no question that security risk and compliance are top of mind for our end customers, for the enterprise customers. And as a matter of fact, that was one of the top 5 in the 5 CEO mandates from the CEO survey I just spoke of, was building trust, creating that security risk and compliance initiative inside the company, driving forward. And I think from infrastructure and IT operation optimization, we really saw, if you remember, back to Lauren's slides, that infrastructure software and that infrastructure play was really driving up in the middle of 2021 and 22. And now they're asking for optimization. We're saying, how do we take this optimization, whether it's cloud or whether it's multi-cloud, whether it's edge computing, it's all these things coming together. Now we have to take that technology that we just spent money on and optimize it through specific initiatives that are going to drive, our fast time to ROI. And of course, I think workspace solutions, we all kind of get that. We're still in a hybrid work environment. So we're really building out on that thought right there from the channel perspective. Go to the next slide, please, if you would. So I'd like to include this slide too, because it'll give you an indication. This is a North American partner survey. Again, this is your partners answering this question about what types of roles are you hiring for. And I like this slide because it gives you an idea of potential gaps in your partner community. We saw security, we're seeing cloud, the digital business, cloud technology skills, anything to do with data analytics, consulting. Those are key areas that your partners are hiring for. So as you're building out your portfolio and you're looking at how do you support your partners the best, these are areas that there may be gaps within your partner community, and that is something that you should consider on how to fill and how to work with those within those areas. Go to the next one. I'm almost done here, so we're coming up. I want to include, again, from the partner survey, what areas do our partners say have a strong potential to be a future driver of their revenue? And again, I looked at North America and EMEA. And North America, in the darker turquoise, 5G, data management, and hybrid cloud, multi-hybrid cloud management were some of the key indicators in high-performance computing, where data management and BI, next generation BI analytics, was key between Europe and North America. There are some differentiators between the two, you can see what's important by region. If you look just at the orange lines, you'll see that they're more grouped more closely together. So EMEA really is looking at a broad spectrum of areas that they think can drive revenue. And I also wanted to point out too, just because you see something on the bottom doesn't mean it's not of interest to the partner. It just means that they're probably already doing it. App modernization's been key, cloud migration, they've been doing that, edge, robotics, next-gen security. So all those things they've already been. The question was really around future revenue opportunities and where they see some of their money coming down the road. Okay, let's go to the next one. I think I have 3 more slides. I can go through them fairly quickly. A lot of talk about cloud in the partner community. So, in the beginning of the pandemic, we were all seemed to be in the public cloud, and how do I get my business to, stand up instances inside the cloud so I can keep my business running. Then as we moved in from, through the pandemic into some of our storms of disruption, the economy in the Ukraine war and the job shortages, skill set shortages and so forth. The cloud has been an opportunity for business. And some of our partners are stating where they are on this cloud maturity model. So if you look at the middle, cloud maturity down there is repeatable, and on to the right is managed. I click up a couple more times there if you would, once and one more time. Yeah. And so what I was showing here is that EMEA seems to have adopted the cloud much more quickly than North America. 75% of those surveyed in EMEA said that they have at least a repeatable practice, all the way out to some that are optimized, where if you look on the right-hand side, just managed and optimized, only 33% of North America is expressing that their cloud business is managed and optimized. So in EMEA, that seems to be a practice that's built out relatively maturely, and there's still some opportunity for North American partners to really drive in and adopt that technology. Go to the next one. Another area, a big discussion point, I just published a document, it's going to be coming out soon, is on cloud marketplaces. And if you want to hit that build that out. EMEA has shown to embrace cloud marketplaces much more than North America. And I'm still doing some research on trying to figure that out. We're looking at kind of building out our baseline. We see cloud marketplaces as a couple different categories. The first would be hyperscalers. The second would be distributors. And that's not an order of importance. It's just cloud distribution marketplaces. We have vendor marketplaces, and then independent brokers or aggregator marketplaces. And so we're doing some research to really define that area a little bit more. So stay tuned on that. But I thought this was interesting to share. A different research that I did said that marketplaces were a threat, but partners saw that as a business concern, basically because they don't understand what is their role. I think that was more from a hyperscaler perspective. I think when our vendors, our partners work with distributors, they really understand where they sit and what their play is inside a distribution marketplace. But it's just, there's a lot of uncertainty there from a hyperscaler perspective. And my last slide, if you go to the next slide, I just thought this was interesting. If I broke it out between EMEA and North America, again, this is the partner survey, and we asked, which vendor is your company looking to add to its portfolio? And so there's a list of partners that the company, these partners are looking, vendors who are looking to add to their portfolio. And I just thought this was an interesting slide to give you an idea of what your partners are thinking, and if it kind of measure it with what you're seeing and hearing in the industry, and if that's tracking along with you. But yeah, that was my last slide. I know we're at the end of time here, and I have some observations. The big elephant in the room is the economy. Looking out over your partner facing vendor executives, there's a global responsibility. And so keep in mind that there's a structural differentiation in the landscape. And this portfolio between EMEA and North America is a little bit different, but all in all, I think we're still, there's an opportunity out there. Customers are looking to spend, but they want to do it very cautiously. So that's my thought there.
Hey, Jeff, it's Frank. That was some good information. One quick question.
Sure.
With the continued evolution of infrastructure as a service and consumption models and things like that, which obviously, clearly has an impact on the business model that the solution providers have in place. What are you hearing about that? What's, are the volumes to the point where it's becoming, more disruptive, or is it all just kind of flowing smoothly? What are you hearing?
Yeah, so from an infrastructure as a service perspective, that is one of the fastest growing areas, and I think you showed it in your some of your numbers at the beginning. Yeah. We're seeing that as one of the faster growing technologies that the partners are telling us they're investing in. And then from an as a service perspective, there is a need. They definitely understand the need. Partners are still moving into that area. There is that financial kind of jump that you go from CapEx to OpEx, right? And so there's that financial lag, you will, from revenue. But they understand that, but they're still moving at a as it is, because of the economy, because of a lot of the things that we've just experienced the last three and a half years. They're cautiously moving, but they definitely understand that's what the customer's viewpoint is, and they're going to accommodate that. Distribution does a great job of helping them along with that as well. So, kudos to the distributors for that.
No, this is great. The people on the chat are complimenting the slides and the information, so thank you.